Friends, in this video for ithought Advisor, I am going to talk to you on the topic thinking safety. How much risk should an advisor advocate for an investor? You will agree that an advisor should always align the risk taken by an investor to his risk profile, his capacity. Generally, when an investor seeks to know what he should do, is he also understanding the need for this alignment? That is a very difficult question, but it has a very simple answer. Investors are more aligned to benchmarking and put benchmarking as a higher priority than aligning their investment to their risk profiles. Why do I say this? Assume you have a low risk profile, then your return expectation has to be lower. So, what should you compare your investment performance with? You should compare your investment performance with a realistic return aligned to your risk profile. But most of us are told that you should compare with a benchmark. Now, a benchmark need not suit you. For example, you could have a risk profile which lets you invest far less aggressively than even a benchmark. You could have a risk profile that lets you invest far more aggressively than a benchmark, and what you do may be something else. So, the key thing which each of us should always remember is that while benchmarking gives you a sense of how well you have done, it does not help you align your investments to your risk profile. While you do that alignment, there are times when you should think safety, which means you are going to compromise on returns in order to safeguard your capital in difficult times. The last 2 quarters were clearly such times. Your investing had to be very careful. It had to walk out of very expensive parts of the market. It had to sit in safe places. It had to have a mix which would not fall too much if the indices fell sharply. But most of us were not inclined or in any hurry to do that. And it is during such circumstances that the markets force us to rethink and refresh and seek safety. Now, this is generally a very abrupt move for many of us. Some of us refuse to make that move because we missed better times to make that shift. But if you fail to make that shift towards safety, you can't hope that you will get better times to do it. Even if it's too late, you still need to do it. We live in times where the markets are going to be very volatile globally and you need to think safety, and that thought should reflect in your investment portfolios. So, look at your portfolio and ask yourself, which part of my portfolio is aligned to the need for safety? What is it that will save me if things get worse? And what is it that I have which will not lose too much value? And what is it that I must address where value is too high and the scope to lose value is also very high? So, think afresh, look at your portfolio, look at the parts of your portfolio that can deliver safety to you, look at the parts of the portfolio that look too risky and can endanger the safety of your overall portfolio, address the needs of your portfolio appropriately, seek advice which will help you address it sensibly, stay the course towards your investment goals, and enjoy your investment journey. Thank you for watching this video.